Hi guys, welcome to the first episode of Trading Simplified. So in this video, we are going to be going over breakup structures and market structure shift. Now they're both pretty similar things, but just different names, and we'll be using them for different things. So with that, we will continue this video. Take notes if this is like if you guys are sort of new to trading. If you guys already know, then just continue watching in case there's something that you guys are missing out. So we'll just go over like graphs of what each looks like. So let's go over breakup structure first. So breakup structure tends to look more like this. A breakup structure tends to look like this, with higher highs being made and lower lows being made if this is bullish and if this is bearish. Whenever we get this break right here, that is our breakup structure. So this previous high right here, and we break past it, that's a breakup structure. In terms of an uptrend, that's how a breakup structure looks like. In terms of a downtrend, this is what a breakup structure looks like. In terms of an uptrend, breakup structure is just breaking past previous highs. So you guys can write this down by yourself, but in terms of an uptrend, breakup structure is just breaking past previous highs. In terms of downtrend, it's breaking past previous lows. So in terms of an uptrend, when you're looking for breakup structures, you have to be looking for higher highs. And in terms of the downtrends, you want to be looking at the lows to see whether we break past it. So that's a breakup structure. Now, a key thing here is that when you guys want to see a breakup structure, and we're not going to get into any strategies or anything yet at the moment, but we have to know the concepts first. The difference between breaking past this high and a liquidity sweep, which we'll get into in a future episode, is that in order to break past this high, the candle has to close above it. So with this given time frame, you want that candle of that time frame to completely close above that high for it to be considered a breakup structure. Then you can maybe look for a long or something, but we'll get into that after. And same for this as well. You want the candle to completely close below this as well for breakup structure. And that's the same for market structure shifts as well. For both of these, you want the candles to close above or below that high or low. Now for a market structure shift, this will be an uptrend and this will be a downtrend. So prior to this, it will look like that, going up, then we just keep going up. And then this low gets taken out, that's a market structure shift right there. And then we start a downtrend. And similar for this, a downtrend and that high getting taken out, that's a market structure shift. So in terms of market structure shifts, in an uptrend you look for lows, and in a downtrend you look for highs. Whereas for breakup structures, it's the opposite. So when you're putting the two together, this bit will essentially be here. We get breakup structures, then going to the market structure shift, it goes down. Something like that. And when you put these two together, and similarly when you put the downtrend together, it'll look something like that. And you'll get a downtrend, and then one of your highs will get taken. Okay, because if we want it to be continuously in an uptrend, then all the highs should be continuously being taken out, and all the lows should continuously be respected. All these lows here should be untapped. And same for being in a downtrend. All these highs here should be untapped. The second that this high gets taken out, that's a market structure shift. And all these are just breakup structures here. And here as well. So that's what it looks like on a graph. Now let's go into the actual charts to identify the difference. We'll just go to a random place. Let's go over here. We can see that we're clearly in an uptrend right on the 1 hour. So we're going up, down, up. That's a breakup structure right there. Down. That's not a breakup structure, but this is a breakup structure. Down. Another breakup structure right there. Down. Oh, actually we can even just use the line graph. No, that's kind of ugly. So we'll just go through candles. Okay. So I hope that you guys can see this clearly, but up, down, and this is a high, so we got a break structure here. Continuing up, retracing, continuing up. This is not a breakup structure. This is an example where it would not be a breakup structure at all. Okay? Because we didn't close above this high, and we didn't even actually sweep that high at all. So that's not a breakup structure yet. Then we just move on, continue looking. We form a new high, and now we got a break of structure there. And then form a new high, break of that high, go up, and we go down, we break past this low, we close below it, so that's like a market structure shift there. And we go up, and now we have like a small downtrend, and then this small downtrend here on the 1 hour is probably just a retracement on the 4 hour, because as you guys can see, this range right here is pretty smooth and it's pretty quick upwards. There was not much retracements at all, so but that's still a market structure shift on the 1 hour. So market structure shift here, and then continuing downwards, this is a break of structure here, and then we get this market structure shift here to continue the up. So this is a good example of when on the higher time frame it would probably just be a continuous uptrend. Let's see. Yeah, so as you guys can see here on the higher time frame, it was just up, down, up, down, up. So this leg here was just a retracement, but on the 1 hour that would be considered a market structure shift. So that's how you can get different entries, and that's how you can also short in a period where it is bullish. As you guys can see, I did short there as well. So that's that. Now let's continue. So break of structure, continuing onwards, break of structure here, continuing onwards. Oops. Break of structure there as well. So that's how you guys can very easily identify break of structures versus market structure shifts. But this is all just in hindsight, right? This is all charts that's already been printed out, and you're just looking at it like that. I don't have bar replay, so I can't really go into that. So we'll just look at the markets right now, and we'll just see whether we're breaking structure or whether we're in a market structure shift right now. So let's go into a cleaner chart actually, so I can start drawing again. Right now, just on the 1 hour time frame, not looking at any other time frames, we were previously in an uptrend, right? You guys can see, just starting from here, let's say up, down, up, break of structure here, we have a break of structure here, and then what we have is this low getting taken out right here. That is our market structure shift. So this market structure shift is now turning us bearish. So now I'll probably be looking for a break of structure here to continue the downtrend until we continue upwards. So that's what I'm looking at right now in terms of live, in terms of this chart. We have break of structure, market structure shift, and now we just want to continue to see. On the lower time frame as well, it will probably be a market structure shift here on the 30 minute. If you guys start piecing it together, this will probably be a downtrend already on the 30 minutes. There was probably a market structure shift here on the 30 minute, and then now we're getting another market structure shift to continue lower. So that's how this looks like on a live chart. If you guys want to have any sort of homework, your homework is to just identify this, looking at different charts and looking at what we're doing right now and seeing if it plays out. But I also want to go over what is a weak high and a weak low and a strong high and a strong low. So because you guys will hear me talk about that throughout, you guys might hear me talk about that throughout this video, so I just want to talk about that as well, because that will link in together with this. So in terms of a market structure, right, so let's just look at that for an uptrend that is reversing, and let's just look at this for a downtrend that is reversing as well. Each of these that are broken are breakup structures, right? And now this is a market structure shift, and then we have breakup structure. But what makes this a breakup structure? Like, this is also breaking past a low, and this is also breaking past a low. But what makes this a market structure shift and what makes this a breakup structure? It depends on what low is being broken, okay? And what do I mean by that? So each of these highs right here are called weak highs. And each of these lows right here are called weak lows. I mean, strong lows. This is a strong low as well. And this is a weak low. And this is a weak low as well. What makes this a break of structure is a break of structure happens when you break past a weak high or low. And a market structure shift happens when you break past a strong weak or low. So a weak high is basically a high that has not put in a new low or has not broken. So it's sort of like going around in circles, because a weak low is only weak because we haven't got a break of structure. But if you guys sort of understand this, it will help you guys identify it a bit easier. So this weak high is weak because we have not broken past this low. This weak high is weak because we have not broken past this low. And now this low is strong because we broke past this high. And that's what makes this low a strong high. And that's what makes this break here a break of structure, because we break past this weak high. So if we're looking at the order of things, what happens is you get a weak high or low. So we'll just go through the bullish, or sort of like this up down trend, for example, at the moment. So what happens is the first event that we get is we have a weak high forming. And the reason why this is a weak high is because we got this low put in here. So this weak high is only weak after you get that. So, but let's just go through that first. So weak high, and then we got this low put in. We don't know whether this is a strong low or not yet. So we'll just wait to see what happens here. If we break past this, then this becomes a strong low. If we don't break past this, then this becomes a weak low. Okay, so first of all, we have this high, this weak high. Then we get this closing above that weak high. So now that it has closed, okay, assuming that the candle has closed above this high, this has become a break of structure, right? Because we just closed above a weak high. Closed above a weak. And then now that we have closed above a weak high or low, in this case high, this then becomes a strong low. So now that we get this strong low, we look at this now. This high, is this high able to produce a move that is closing below this strong low? If it doesn't close below this low, then it is weak. So as it goes down here, it creates a low, and then it goes up, closes above it, then it becomes a weak high. So then now we see here, this is a strong low. Then we continue to see, we close above it, this is a strong low. But now we go down here and we close below this low. When we get a market structure shift, this low that is created is probably going to become a weak low. But this is still only speculation. This weak low is weak until it is able to produce a high that closes above this high, which is now a strong high. So a high or low is weak until it is able to produce a move that is going to close above or below a high or a low. Okay, so this is now a weak low because it has still not closed above that strong high yet. So weak low, and now you're going to target that weak low. So with that strong high, this becomes a strong high after it closes above that weak low. So we get that market structure shift here, and then we get this strong high, and then we get another break of structure, which makes this a strong high. So I hope you guys see how this works. Now going on to this, it is the same thing. So we get these weak lows here that we just keep breaking structure past. And then once we break past the strong, this becomes a strong as well. That's what I just said, right? A weak high is weak until it is able to close above a strong. So now that it has market structure shift above this strong, this then becomes a strong. These continue to be strong lows as they keep closing above the weak highs. Break of structure here, break of structure here, market structure shift. I hope that this has helped you guys in some way. Take note that this is not at all a strategy, so make sure to watch all of this in conjunction. Don't just skip this video because you think that is some easy thing. It's going to be tying it into other things as well. So I hope that this has helped you guys, and I'll see you guys in the next episode. Bye.